So some of the challenges of ultra high net worth portfolios is what they invest in, right? So it's not just stocks, bonds, but could include private equity, venture, real estate, art, collectibles. So having a full picture of that entire portfolio is a challenge. You need to get the information, which is aggregation. You need to correct the information, which is reconciliation. You need to be able to calculate correctly. So that's one challenge, is to be able to support that level of complexity across the various instrument types, asset classes. The second challenge is in terms of the ownership structures. Oftentimes there are partnerships, there's LLCs, there's nested account structures or entity structures, there's co-ownership among family members or even other outside investors. So be able to support that level of complexity across each of those investments is also a bigger challenge. Third is the personalization, right? If you have a single family is not just a family. It consists of 5, 10, we have clients with over 100 family members as clients. And so be able to make the information relevant and personalized to each individual stakeholder is a significant challenge. The last major challenge is operational scale, right? How can you have information that you can trust, have it fast enough to be relevant, have it personalized to each individual, but do so with a lower operating cost and just operating scale, right? Instead of having 20 people in Excel, can you have a system that you can literally click on and have the information available to you, right? Those are the biggest challenges. The reason why most systems don't work is they are focused more on the technology than the data, right? And you see that in all the headlines. It's all about technology, it's all about innovation. The challenge is, it's not a technology challenge, it's a data challenge, right? So how do you get the right information? Think of aggregation, right? There's a lot of aggregators out there. What information are you aggregating? How are you getting that? Are you getting trade date information versus settlement date information? Most aggregators are settlement date. Performance is a trade date calculation. So right there, the vast majority of systems fail. And when they fail, we do side-by-side comparisons against other large, well-known fintech platforms. And the errors are on the low end, a couple hundred basis points. On the high end, we've seen as much as over 27.6 percentage points. That's material. And if your average client is 200 million, or you have several billion, and your reporting is off by 10, 20%, that's pretty significant. We've seen other systems duplicate cash, so your liquidity is wrong, right? The challenge is getting the right information, knowing what the end product should be, and that's data. Technology facilitates that, but it's a data solution, not a technology solution. That's the biggest difference. Another point of reference in terms of why or how other systems are failing is we speak to a lot of family offices, we get a lot of calls, literally almost every week, where they are paying for a software system, a well-known fintech or financial conglomerate system, but they're using Excel because that system is not supporting their complexity correctly. And so they end up using people in Excel, right? Think of real estate, venture, private investments, direct investments through funds, through privately held investments. Most people are still relying on Excel because these other systems cannot support them correctly. The end result of this industry is really giving ultra high net worth individuals information that is complete, comprehensive, and trusted, which is accuracy, and quickly and personalized. And that's the greatest challenge.